Hello and welcome to the High Altitude Investing live stream. Today is 1/31 of 2018 and we're going to be discussing timing on this correction, kind of how I see this going over the next little while, a few months. We'll talk about the wave count, we'll talk about the potential outcomes, and then we'll be going to do some altcoin requests right after that, so get those ready. And then yeah, it's just going to be a good day here trading crypto, all of us sitting around and looking at charts on TradingView. So we'll get right into this after a couple people more show up here. Looks like just waiting for this watching number to go up a little bit. Welcome everybody. BitConnect. Yes, BitConnect is all the hype right now. There's so much hype around that coin. It's gonna pump. Not really though. Yeah, cool. So looks like we got excuse me, quite a few people tuning in now. 51. Okay, that's plenty enough to get started on some TA. So we'll start with looking at Bitcoin. If you go into the 30-minute candlesticks, you can kind of see what's happening on a smaller time frame, which is good to check. I like to focus on the big picture the majority of the time, but if you want to focus on the little picture occasionally, if you're a day trader, or if you're just trying to see like some short-term price action, it's okay, but I would just remember to not get stuck in the little picture, because a lot of times what happens is traders will start to learn that they can look in different time frames, and then they get so interested worrying about like the 1-minute candlesticks or like the tiny little moves in a market. And to be honest with you, it's harder to predict the smaller moves in a market. You have more accuracy in bigger time frames due to the fact that the setups have higher probabilities of playing out. And it's literally just because in smaller time frames, the volatility can get crazy sometimes. So if you're day trading, you might have some increased volatility, which gives you less odds of being right in that situation. So personally, it's good to check smaller time frames, but just remember not to use them all the time. They can also aid in over trading, which is basically when you are so obsessed with trading to the point that you're just doing it 24/7 and then you're overthinking decisions. So it's honestly better to overall avoid using them consistently. But we'll check out the 3-hour. So I like to use them, like I said, because it's important to understand the smaller time frame movement, but you don't want to make it the only thing that you're worried about. So that's kind of in a nutshell how to worry about time frames like that. But if we look, we have this nice downward channel that's kind of been forming. And if you kind of go to the 12-hour, those wicks, I'm just kind of moving this line up above those wicks. This looks very bull flag to me. So bull flag pattern, you can just Google this. I always like to Google these patterns during my streams. This is what a bull flag looks like. It's a bullish continuation pattern. Basically means that sellers are getting squeezed. So the short sellers and the people that are taking profits are getting squeezed down into a channel, which means buyers are coming in with heavy amounts of volume the lower it gets. Like this. See, we have volume spikes here, here, and I'm assuming we'll have a nice volume spike here again. Do you notice how the volume is decreasing? That also means that the selling pressure is getting less, because this is short selling volume. Right here, that's a short seller's position getting taken on at 20,000. And then right here is more short selling positions getting taken on. But do you notice how there's less? That's because they know there's less volume. That's because they know that they're getting squeezed. There's a certain point where the risk to reward won't be good for selling anymore, and it will be good for buying. In my opinion, that will be around the $8,000 range now that we fell through support right here. So I'll kind of show you what that looks like Let me remove all drawing tools here. So yeah, big picture, I'm still bullish, you guys. I think that we'll catch support right here at 8 and bounce hard, very hard through 2018 and continue upwards. But in the small time frames, if we look at this, we have a pennant that formed, this triangle, and we broke bearish out of that triangle. So we can expect lower lows now. This is successfully proven that this consolidation range, the spot where buyers and sellers were fighting each other, consolidating, it has broken downwards out of that, which basically confirms that the market has some free fall movement on the downside. Now, again, what have I always taught you guys? To never sell red days. If you have some tether, be open-minded to buying in the $7,000 to $8,000 range. 83 to about 75 is a really good spot right here. We can draw a horizontal line over here on TradingView, the top left, you can click on that. And then we can draw a horizontal line in this area here. That's a really good spot to be interested in picking up more coins as a buyer perspective in a bull market. Because overall, we're in a bullish trend. This is just a bearish move, or a short-term bearish move in a bullish trend. So this is what you would call a correction. This isn't a bubble pop scenario. The reason that I know this, or at least one thing that's pointing this out to me, there's lots of things that are pointing this out to me, including the Elliot wave count, the increasing volume along this trend, because as you noticed how much volume we've been increasing along this trend line rather than decreasing. Yes, we do have some decreasing volume during the correction, but overall we're increasing in volume on this bullish trend. So that's one thing that's pointing out that this has more upward movement left. Another thing that's really helping me see that this isn't a bearish move or a bubble pop scenario is bearish trends generally expand when they move on the downside. Do you see how this, what happened here in 2013 with Bitcoin? How this is expanding downwards? The prices move like this and get bigger as they go down, like that. Let me just move. It's an expanding move. That's bearish. Selling pressure gets eaten up in this formation, right? Each time it hits resistance, sellers come back in, and then it gets bought in, and it's expanding downwards. So the reason that Bitcoin is bullish still is if we look at the pattern that we have, we have falling prices, or wedging prices too. So there's somewhat of a wedge here, but I like to look at it as a bull flag actually, because this is very channel-like. It looks more like a channel to me, ignoring those wicks. So I like to look at this as a bull flag, but some people would say it's a falling wedge. This is what the falling wedge looks like. But either way, prices are falling in this fashion. They're getting squeezed. They're getting squeezed, which means the buyers are in charge of this move. Buyers are in charge of this market here. Yes, we will have a test of these lows. We will come touch these levels down here at 8,000. But is there any reason to panic? No, because this is a big falling wedge pattern. Falling wedges, not only do they have a breakout move, which you can trade from the point of the breakout, which will probably be about 8,800 or somewhere down here, you'll have a breakout move which you can trade, which moves the height of the wedge. So you can measure from there to there, put this on the point of the breakout, and expect a bullish move to that level. So in this case, we'd have a very quick pump to the $17,000 levels. And then after that, you'd probably have a little bit of selling pressure come back into 13, and then we could see more upside movement from there. So let's kind of look at the Elliot wave count in this correction and see what the live dashboard is saying. So 5,000 would probably, in my opinion, 5,000 is very unlikely, but it is possible. In fact, it's totally possible, you guys, for us to touch the 88% retracement. Now, I don't see that as likely because of the fact that we'll have so much, the way that this is consolidating is bullish. And so to get really past below 8,000, we would have to be so oversold. It would be like the amount of oversold that the market would be at that point would have to bring it even higher up out of that. It would be one of the best buying scenarios you could ever see if it fell that low. So even if we saw that type of a move, as long as you have strong hands, you're okay. Because if this fell, you have to think of it like this. If this fell directly from 20,000 all the way back down to 3,000, that move would be as drastic as the buy move. And generally, impulsive moves on the downside take a longer time than impulsive moves on the upside. So bearish movement, generally speaking, or selling pressure is longer or takes longer to happen than the buying pressure. So you have to think of, well, if this fell almost as quickly as it got bought up, all the way back down to 3,000, that market, all of that selling pressure could be so built up down that low that it would pop even harder out of it. Now, do I see that as likely? No, because we're already wedging and we're in a bullish pattern. This is a bullish pattern to see this channel. So that means that buyers are coming in strong in these lows and volume is picking up. So it's almost, there's really too much buying pressure to see us drop much past below 8,000, but you can never be ignorant to possibilities. You have to be aware that anything can happen. But in my opinion, probabilities point towards 8,000 being a strong bottom for Bitcoin. So there's a couple things that are pointing that out to me. We'll go over what those are. First of all, Fibonacci. If we measure from the beginning of this impulsing back in 2017 to the top of 20,000 that we're at currently, you can see that 10,000 was a very strong support at the 0.5, where we came back down and we tapped it right here, just a little bit above it right here, and then the market went all the way up to 17,000 again, and then we touched 10 again and consolidated. Then we made this rising wedge pattern. And the smaller time frame right here, this is kind of like a little rising wedge. And we made this little bear pennant right here, and it broke down. So let me remove those lines so it's a little clearer to see again. And now we can touch the 618 retracement, which is at 8,200. So if I was trying to buy this market, how would I buy it? I would use a ladder zone. So I would set buy orders down at like a little bit at like 7,000, a little bit more above 7,000 at like 7.2, even more at like 7.8, and even more at like 8, and then a little bit less at 8.2 and a little bit less at 8.7, and just have those like a buy zone in this area right here. Because you're not going to be able to perfectly nail the bottom, but as long as the majority of your orders get filled in this panic, you'll be able to catch the bounce on the out move back on the upside, the breakout of the bounce. So that's kind of, the Fibonacci is pointing towards that being major support on the 618. The 618 is the golden ratio, is what traders like to call it, or the perfect spot to buy or short. So generally speaking, that's the best spot to take positions or to take profits too, if you're looking for targets. So the 618 is a really, really useful Fibonacci number as a trader. You can even see it in this leg right here, where we draw from, oops, if we take support and we think like a short seller, and we draw from the top of this right here, or resistance, excuse me, down to previous support, which was basically right here at 13,000. Yeah, support was at 13,000. Okay, you can see that the short sellers came in at the 618 here. So Fibonacci is really useful for finding those entries. Short sellers came in on that bull trap, that little rising wedge pattern on the 618. Okay, let's remove all drawing tools and then check the live dashboard. See if we have any questions about what I'm doing. If it fell to 3K, no, that wouldn't be a bubble pop scenario. Basically, cryptocurrency needs to hit trillions of dollars in valuation before we can have a bubble pop scenario. And there's a reason for this. The main reason is that the demand for cryptocurrency isn't decreasing, it's only increasing. In fact, the amount of exchanges that we have Binance and we have all of these major exchanges, and they're having to not accept new users because of the amount of support tickets that they're getting, which means these exchanges are physically overloaded. So the demand for cryptocurrency isn't going anywhere right now. In fact, it's continually increasing. And so when we have falling prices and increasing demand, you can't have a bubble pop scenario. Until we have that demand leave, then cryptocurrency will continue going up. And honestly, I personally think we will hit trillions of dollars in valuation before we get overvalued, which puts Bitcoin at 100,000. And that's why I talk about in 2018, Bitcoin can hit 100,000 per coin, is because once this type of parabolic movement starts like this, you have to think like an institutional investor. Cryptocurrency is the biggest trend in history since the internet in the 90s. And if you go look into what happened in that scenario, we had an overvaluation of the market, but it actually took quite a bit of time to do so. Now, with cryptocurrency specifically, we have countries like Venezuela. Third world countries are actually using it as a store of value. So that means the demand for currency, since fiat is continually losing value, the demand for cryptocurrency continues to increase. Now, that doesn't mean that that demand will continue to always make this market go up forever. I mean, yes, it will continue to make cryptocurrency go up forever because every single market that has a real world use case goes up forever. There's just corrections and panics along the way. But if you think in continuation, markets keep going. So basically with cryptocurrency, you have to think like continuation. There'll be points where it's overvalued. Like when we hit 20,000 per coin, this was overvalued on the short term, right? But if you want to think big picture, I don't think that we'll hit a stage where we're overvalued across the entire cryptocurrency market until we get into the $100,000 range in Bitcoin. This would be a point where I could easily see overvaluation for cryptocurrency. But we have increasing volume along this trend. Do you see that volume getting crazy? Look at that. Increasing volume along this trend. Yes, we do have some short-term prices falling, but every single time prices have ever fallen along this bullish trend, they've been engulfed. And every single time people thought the bubble popped. I've been watching Bitcoin since 2015, you guys. I started picking up my first coins in this area here. Okay, this is when I got interested in cryptocurrency. My little brother told me that there was this thing that you could mine on your computer and it was worth real money. And I told him that that's bullshit. I was like, there's no way that that's real. And so I looked it up on YouTube and I started watching videos and I fell in love with the technology. And it matched up with a lot of my political views and my philosophical views, I guess I should say. More philosophical and less political. And so I continued to be interested in the technology. I started buying them around this area. My first purchase was actually pretty low. My first purchase was in this wick here below 200 for Bitcoin. I had been watching the prices along this area here in earlier 2015. So I've watched Bitcoin go out to 500, and then people call this a fake breakout on TradingView. I remember when everybody said that this was the end of Bitcoin and the perfect short sell opportunity when it broke out to 500. I knew it was going to keep going up based on fundamentals at the time, because that's mainly what I based my trading strategies on. But since I've switched to technical analysis because I've found it to be more accurate, but I knew that Bitcoin would keep going up, and sure enough it did. I got really, really excited when we broke out to 750. And then of course, you know, I got extremely excited when we broke out above $1,000 in the beginning of 2017. Because that means that we're in pure price discovery mode after this. So I've watched everybody think that this was the end of Bitcoin from 3,000 to 18. I've watched everybody think that this was the end from 5,000 to 3. And then they thought it was the end at 8 to 7, of course, or 8 to 5. And now they think it's the end again. But this is just the way that prices expand. People take profits, and the market has cycles. You know, it's not, nothing goes perfectly straight up. If you want to find, you know, if you can't handle corrections, if you can't handle sell-offs, if you don't have a plan for handling sell-offs and you just want markets to go straight up all the time, trading isn't for you. You should probably go find something else to do with your time, because you will never make money doing this if you feel like you only want things to go up. And if you find yourself getting mad when they go down, you have to change your perspective, because you'll never make money getting pissed off at prices dropping. You have to change your perspective and think and realize that that's the cycle of the market, and be okay with that. That's people taking profits. If people didn't take profits, you wouldn't be able to make money. So you just have to think big picture and stop worrying about all of the little red candles. And remember that red candles are buying opportunities. Think like long term, think in terms of continuation, and trade bull trends and buy panic on bull trends, because that's how you get a good risk to reward ratio. This is panic, you guys. If you go on Twitter, if you go on I don't know, I don't really look at the news ever, honestly, but I guarantee that the news stories are posting FUD everywhere around cryptocurrency right now. But as you guys know, I don't really ever check that. I just worry about the prices and the reaction and action of those prices. So is Bitcoin dead? No, Bitcoin's not dead. Could it fall even lower than 8,000? Yes, it could. Would I ever sell down there? No, because we have increasing volume in a bullish trend that is one of the biggest innovations in human history. Not only does it have the potential to continue going higher, but it has the demand to continue going higher. All right, so enough of that. I think that everybody pretty much understands that crypto is going to keep going up. And if you don't, then go find another channel to watch, because that's what we teach here. So watch this bullish trend and have your buy orders laddered in along here, because I think that this will be a perfect spot for us to complete this ABC correction. If we count the waves, we just go A, B, C. That's a perfect Elliot wave. And then we start impulsing down right here. In C legs, you always have 1, 2, 3, 4, 5 down. So we basically have a perfect correction getting squeezed right into a bull flag. This is one of the best buy scenarios I've seen in a long time, actually. So that's kind of why I'm telling you guys to keep your orders there. And also, when we're breaking all-time highs next time, so that you're not so frustrated in these dips, remember to take some profits in the US dollar tether, and don't worry about the FUD around it, because it still works as a storage of tether value. You can still hold your value there. And until the system doesn't work, you need to focus on expecting things to continue to work and making money off of them while they do, and then taking those profits and locking them in. So if at some point anything ever did happen, you would already have so much profit off of cryptocurrency that you wouldn't care, right? The goal is to accumulate gains so that when so that when it is overvalued, you can let it drop and not care. So okay, let's see what is going on here. We have a lot of reactions to all this. 500 people in the stream today. Very nice. Very nice. All right. So let's go over some coins now, actually. And by the way, I disagree that US dollar is a risk right now. I have talked with people and, you know, take it for what it's worth. But I've talked with people that said even though they don't have an auditor, they still have dollar for dollar. Take it for what it's worth, but that's what I've heard from trusted sources that I trust. So, okay. Now let's go over some coins for y'all. Ethereum, one of the big ones. This is what we'll start off with today because a lot of people are buying it thinking that it's going to go higher from current prices, and I disagree. I'll show you what I think it's going to do. All right, so now we've been watching Ethereum for a good minute. One of the first things that I kept drawing in these live streams for you guys was this ascending triangle before it broke out. We were watching this consolidation pattern for a while in Ethereum. For anybody that's been watching me for a long time knows that I kept talking about how Ethereum was an ascending triangle, and when it breaks out, it'll move the same height as the height of the triangle. So we measure that move, and it did move that high and even higher. So a lot of times you expect overperformance, especially when this market has been consolidating for this moved, or let's see, yeah. We basically had this, or well, let's start in the triangle. Yeah, here we go. Yeah, this consolidated for like 177 days inside of that ascending triangle. So when we had a clear breakout, of course, it was extremely impulsive. Now, we saw at the point of breakout a percentage gain of 250%, which is very nice. If we look at the previous bull run in Ethereum, I started watching Ethereum when it was very first added to Poloniex. I actually remember the day that Ethereum got added to Poloniex in 2015, and I watched it dump, and I watched it just go, it was worth like 50 cents for a long time. And I just was kind of like watching it, and I watched it go out to $6.50, and that kind of was one of the first big trades that I ever took as a trader and made a little bit of money. Well, it was big to me at the time. It was probably only like a $250 position and probably only made like 30 bucks or something, but it was like crazy to me because, you know, I didn't really know as much as I do now and didn't have nearly as much capital to work with. But this move was 4,800% on the upside. And from the bottom of this ascending triangle up was about 800%. So you have to remember that the percentage gains gets less and less as prices get higher and higher because it takes more money to increase its market value. So if something has a $1 billion market cap, you have to have another $1 billion come into that to double its value, right? Whereas if something has $1 million market cap, it only needs another $1 million to increase its value. So the percentage gains are more with smaller market capitalization, which is why as we continue to see prices go up and up higher, the percentage gains get less and less. So a 250% move on the upside for Ethereum is completely possible for this to be the top of its short-term market cycle. And this is actually what I think it is. So I'm going to count the subwaves in this move because this is a market cycle starting from here over. We have subwaves. A new Elliot wave count started here because this was an Elliot wave right here and then an Elliot wave right here. And I'll show you kind of the big picture waves and stuff. But in this subwave count, we'll look at this and we can draw a clear 1, 2, and then a nice 3, 4, 5, up to 1,300, just shy of 1,400 per coin. And now it is my personal belief that we are in an ABC correction. So we will see an ABC leg back down to about $520 here with Ethereum to come retest these support levels. So if you have some Ethereum, it's a good spot to take some profits because we will see this C leg down, lower lows in this move. And let's take a look at kind of the pattern here. We see a rising wedge right here. Well, some might say this is a bear flag. I personally look at this more as a rising wedge that's already broken support. All right, and so that means that we can measure the amplitude of that move. So we go from the bottom to the side of the wedge and then draw from the point of the breakout. So we can see at least down to 800 per coin again from here. And then after that, we'd expect some overperformance downside to probably about 500 per coin again to retest those lows. So don't be afraid when this happens. Don't be scared because we're still in the 3 wave for Ethereum. So if we draw the subwaves of this wave, this was the 1, this is the 3, and we'll still need a 5 of the 3. Okay. So we still have more upward movement left, but on the short term, I see us touching these levels down here, like this. All right, and then we can go like this, and the reason for this is because this was the 1 wave. So 1, 2, and we're making the 3 wave, and then we'll have a 5 up and out, right? So the 5 wave out of that wave set will take us to, I'm thinking like 5,000 per Ethereum in 2019 is very possible. So that's kind of the way that I see this. That's how I'm counting these waves. And that's my current price predictions for Ethereum, short term, mid-term, and long term here. Now, remember at the top of this 5 wave, I do think that towards the end of 2019, we will be overvalued. So be aware of that overvaluation. Be willing to take profits into the US dollar, short term, because the US dollar is a good storage of value, short term. Also, if you want another place to take profits, I personally have been accumulating silver and think that this is a good investment. And the reason is because that the market cycle is bigger. So around the time that cryptocurrency is topping out, silver will still be undervalued. So I think that this will be a nice spot to store some of that value on the short term when crypto tops out. And as you can see, I'm thinking crypto will see some short-term resistance in 2019, somewhere around here at the end of it, or the beginning of 2019-ish. So I'm bullish all through this year, by the way. And then I think that we could have some selling off. Now silver will still be very undervalued because it started a new market cycle. So this is the first sell-off in a new market cycle. Let's pull up our market cycle graph that I love to teach people. Check this out. So we have the first sell-off for silver. That's what this is right here. The first sell-off in the new market cycle, which means all of this on the upside is price discovery up here. When it breaks out, that's all price discovery. So maybe by 2025, we'll have easily by 2025, we'll be broken out and be making that 3 wave, right? And 3 waves are bigger than 1 waves. Remember, they have more, generally speaking, they have more volume, not every time, but they definitely have more price action. They're bigger and are more impulsive. So the 3 wave in silver is going to be crazy. Wouldn't surprise me if we go to $250 per ounce in the 3 wave of silver. So just be mindful of that and be watching silver as around the time that crypto starts to get overvalued. I'm sure I'll be talking about it on YouTube a lot in my live streams. But look at that. Doesn't that look amazing? Silver? If you just zoom out and you switch to the monthly and you just look at the big picture, and I really stress that a lot because that's one of the biggest problems that we're having in the trading community today is that they're so focused on these little moves. And if you just like zoom out and look at the big picture of things and then exercise patience, be willing to hold and be willing to buy panic when everybody thinks it's dead, like, you know, right here, everybody FUD silver. Be willing to buy that. You know, if you're willing to buy all that red and then think in terms of continuation and big picture, it is amazing what will happen to your trading. And you'll even find your accuracy increasing because, like I said, the bigger picture setups and the bigger moves are not only more profitable because they take less work. You don't have to sit around and watch your computer all day. I know a lot of people get into trading and they're like, oh, I want to be a day trader. It sounds so fun. I get to watch my computer all day. I check charts a lot, don't get me wrong, but I don't sit and day trade all day, you know? Like, I'll take positions and then I'll let 2 to 3 month cycles play out, and sometimes longer. You know, like with Bitcoin, you can think big picture all through this year as a bullish. With silver, you could think for the next date range. You could think that in the 3 wave, for the next 4,000 days, we could expect bullish movement for silver. So that's an easy market cycle to play. You just accumulate it whenever you've got a little extra spare change. And for the next 4,000 days, you make money. So like, if you can like kind of stop worrying about all the little get-rich Ponzi schemes and BitConnects and panic sell days and just all the FUD and all the bullshit, and just look at the big picture and see that this is a 700% gain move within a 15-year period of your lifetime, and then realize what you can do with 600% more than you had before in your life, and then start buying, you know, because you start to see and start to understand a little better. Oops, let me remove that. I didn't want to get all my volume gone there and all my indicators. Okay, let's see how the live dashboard is reacting to all this. All right. Lisk, yeah, let's go over Lisk. This is a heavily requested one. Oh, and by the way, I think that by mid-February, the majority of this crypto panic will be over. Just that's, from what I can see, based on the bull flag, that's kind of my time frame. I wonder if I can turn this off. Hold on just 1 second. For some reason my fan turned on and it's probably making static in my stream, so I tried to turn it off there real quick. Alright, so what was that coin that I was going to go over? Lisk, yeah. We'll go over Lisk and then we'll go over Tron because that one always gets heavily requested. I love kombucha. Kombucha is really ding. Alright. Now, daily candlesticks. Look at that breakout. Not really though, actually. Don't get stuck in this bull trap, you guys. And I'll explain why it's a bull trap. Bull traps are usually pretty easy to identify because at the top of market cycles, you want to be looking for profit-taking wicks. Do you see how we have these huge wicks up here and huge wicks up here? That's people taking profits. That means that the demand is gone. Do you see how volume is falling along this trend? We don't have an increase in volume, we have dropping volume. That's dropping demand. Now, do I think that this coin will keep going up long term? Yes, I do. Short term, what do I see this doing? This looks kind of like a head and shoulders pattern to me, first of all. So let's take this and we can look at it like that. So this looks like a potential head and shoulders pattern with the left shoulders. I don't really trade head and shoulders, but I like to be aware of them because they pop up on trend reversals, but I don't really trade them as a traditional day trader might trade them by measuring the height of the head and then buying or short selling the breakout. I just generally like to be aware of them as a potential trend reversal. So that is a potential head and shoulders formation. And we have a very clear ABC up. So this looks like a bull trap to me, and I'll point out exactly why. We'll go into the 12-hour candlesticks here and start to kind of look at this wave count. First of all, on the 12-hour candlesticks, this green candlestick right here successfully closed, and it closed with a huge wick right here. So that wick means that people were taking a lot of profits out into this area. It was parabolic and it couldn't sustain that growth. So profits were taken into that wick. That's very bearish, or short-term bearish at least. And then also, if we want to do some Elliott wave counting on this trend, we can count a 1, 2, 3, 4, 5 wave, and then a 1, 2, 3, 4, 5 wave. So we're getting a lot of 5s on 5s, which is never a good thing. And this looks very zigzag to me. So in an ABC correction, you always have a zigzag down, A, B, C, and then a zigzag back up, A, B, C. And this is generally where the bull trap happens. Right here, this is where everybody thinks that the trend is returning to normal. Right here, this is where everybody thinks that it's just gonna supermoon and go really high, when really it's not. It's actually gonna go lower because it has 1, 2, 3, 4, 5 waves down lift. So that's the subwaves inside of an ABC correction. So those are the Elliott waves inside of the standard correction, right? An ABC. So let's see if we can find these Elliott waves in Lisk currently, right here. Okay, we'll zoom in here. What does that look like, you guys? This looks like a very clear A, B, C. And then if we look even closer, this is an A, B, C, back up. So what can we expect now? Well, we can expect a lot of selling to happen really quickly and take us back down to lower lows. Now, let me fix that because that is a really far 5 leg, and I'm not trying to make you panic sell or anything because it's not going to be that intense. Okay, let's look here. Yeah, so I would expect this to hit its lower trend line. So let's draw this trend line right here. So that's kind of my target for Lisk. This looks very bull trap, very rising wedge, and I personally think that it's just an ABC correction that needs to touch $8 again. So don't get caught in that bull trap. I know it's been pumping today. It's right behind Ethereum, and it's right behind, what was the other one? Neo. Neo is also doing this exact same pattern. So if we take a look at Neo and remove all drawing tools, and then we look here, what does this look like? Bull trap, zigzag, ABC correction. 1, 2, 3, 4, 5. And now we are very, very ABC down, ABC back up. See how zigzag that is? That's one thing that you'll notice a lot in bull traps, is they always look like that. It shouldn't be, a bull trap should never be a nice 1, 2, 3, 4, 5. It should never look like a perfect 1, 2, 3, 4, 5. If it looks like a 1, 2, 3, 4, 5, the bottom might be in place already. It's more likely to see a bull trap looking zigzag like this, ABC up, because that's what makes the rising wedge pattern. See, that's what creates a rising wedge, ABC. And that's what we had right here, is a rising wedge, ABC. And then we broke bearish out of it, so now we can expect a 1, 2, 3, 4, 5 wave down. 1, 2, 3, 4, 5 down. Because again, in ABC corrections, you have ABC, ABC, and then 1, 2, 3, 4, 5. So, Are you all following me on the corrections for Neo, Ethereum, and Lisk? Let's make sure we've got everybody learning here. Willem, if you want to make a ton of money now, keep trading crypto, but think in terms of 1 to 2 month setups, or 2 to 3 month setups, because I find them to make me more money than day trading. So if you just try to think like, yes, you want to make a lot of money, but think like how much money you can make through 2018 if you buy and then a few months later you sell, and then you buy and then a few months later you sell, and you think in a few months periods of times, rather than trying to just get in and out all the time in the same day. Because if you're just trying to day trade, generally I have found it to be harder overall, and the setups don't play out as consistently as the bigger ones do. So just keep that in mind, and I personally recommend focusing on the bigger setups. Check out Trade Devil. I don't know what that is. If you want to explain it, maybe I'll watch them. Stonebrook. Check out KMD. Okay, we'll start with KMD. Dragon. All right. Okay, so Komodo Dragon, just kidding. This coin reminds me a lot of, yeah, this kind of looks like the Zcash chart. So let's just take a look at Zcash real quick, and then we'll come back to this one. I think I've shown you guys this before. Yeah, so this looks a lot like the Zcash chart. Zcash didn't quite go as high on its breakout, but it's very similar. And by the way, Zcash I personally think to be a pretty good midterm hold. If you guys are looking for something, now isn't the best time to pick it up. I'd wait for everything to make that lower low, but it is a pretty good setup overall with a strong trending support line. So let's go back to KMD. So Komodo is basically following the rest of the market cap right now, is what it looks like. If we can just draw this trend line here, it has a very, very nice trend line. It always has. And then I wouldn't be surprised if we come test pretty close to this trend line at about $4, like right here, would be a good spot for this to land. This one went very, very parabolic right here. Its pumping day literally happened in like a week time, and it was already done pumping. Generally, we don't really see stuff move the entire move in a week, so that was pretty parabolic. It's probably why it's falling off so hard right now. It is falling in a nice down channel though, or a bull flag. So anywhere down in this area would be the potential buy zone if you're interested in picking some up. This also does have nice volume in this area, so the trend is still healthy and has a pretty nice probability of seeing continuation on the upside. If we take this, we can draw some Elliots here, and I would consider us to be making a 3-wave right now and not completed the 3-wave yet, and something like this to be the wave count that we're in currently. That's how I see this. It's very nice. Good setup. And if you want to calculate the percentage gains from that potential buy zone at $4 to the next wave up, you're talking about at least 500%, maybe even more. So yeah, it's not a bad coin. All right, let's check out Stratis. All right. So again, everything is a little bit overvalued on the short term right now. We're just having that market cycle, you know, bullish movement, bearish movement, bullish movement, bearish movement. It's just how markets work, you know. And if you're mad at that, again, trading isn't for you because it happens over and over and over and over again. It's about understanding the cycle rather than getting caught up in it. So this is a bull flag as well, or this one is probably a little more falling wedge to me. Yeah, that's a little bit more of a falling wedge pattern, which is a bullish pattern again. Now it doesn't have to go this low. That's where I draw those lines too. So don't take that as a prediction that it's going to go that low. Now, I will say, though, that it's likely to touch the 618. So if we measure Fibonacci from the bottom of this support up to this top of this new resistance in this leg, I would expect, well, we've already landed onto the 618 actually, so I wouldn't be surprised if we touch this 786 now, because everything is looking like it needs another lower low. And so it's likely that we touch the 786 here in this lower low, which would put us about $7.58. But big picture for Stratis, this reminds me a lot of the Bitcoin chart back in 2015, just like these beginnings to new market cycles. And for the big picture of Stratis, this was really just a one wave, and we are making that three wave. We are not completed in that three wave yet. In the subwaves, you've already had a 1, 2. Now we're experiencing the 4. Then we'll have a up 5 out like that. The 5 wave is going to be crazy, you guys. And this pump that we're going to see over the next few months when everything starts breaking out by mid-February is my personal prediction. I see a lot of this getting very parabolic again very quickly, just like we saw back here. It really is the same story over and over and over, you guys. People get scared, people get excited. So as long as you can remember to not get too excited, it's okay to get excited. Trust me, I get excited too. But as long as you can keep a clear enough head to take some profits along that ride and in that euphoria, you're good. So just remember, fear, excitement, panic, greed, it's all the same. It just paints these market cycles, and it's just really understanding them is what helps you not get caught up in them and then make bad decisions. Snov? Yeah, let's check out Snov. I don't see that on TradingView. So I basically stick to TradingView for TA, so unless... Okay, yeah, Tron, I forgot about Tron. Everybody's begging me now for my Tron predictions. I like Tron. I've got a little bit of a holding in it. All right. So, remove all drawing tools. There's a couple scenarios for Tron here that I personally see. First of all, if we take this and we go to the 12-hour, because I like the 12-hour, it's a good spot to look at the Tron chart. We can start doing some analysis on this. And one of the first things that I'd start with is that we do have a little bit of a trending support line right here to be aware of. If we can catch support right here at like 500 Satoshis or 520 Satoshis, that would be nice for this move. We are in a downward channel, kind of a little bit of a wedge pattern here. So if we can see a breakout of that, that would also be nice for this bull trend. But it is also possible for us to see another lower low. Just to be aware of that. I have a stop loss on this coin personally. If it drops a little lower, I'm going to get stopped out and try to buy the lower low because I personally see that lower low, if it makes one, being more like 250 Satoshis. Now, do I see that as the main scenario? No, the main scenario that I'm looking at Tron in is bullish right now. So I think that this is what we've had happen, which is a 1, 2, 3, 4, 5, up, and then an A, B, C correction. So that's how I'm viewing Tron currently, which means we need to see sideways consolidation. So it'll generally not be going up or down, just kind of sideways right here. Might have a little bit of a breakout. And then a nice move on the upside like that. So this is what I'm looking at. This would be a 1, 2, and then we need to make a 3 wave, right? So this is how I'm viewing Tron right now. This is the setup in my primary prediction, but we can look at this from another perspective. Just so that you're aware of both scenarios, because anything is possible. This could also be looked at as an A, B, C, and then an A, B, C, meaning that we still need an A, B, 1, 2, 3, 4, 5. That's possible. Just so that you're aware of both scenarios. Now, if you want to protect yourself from that, you could have a stop loss at support. There's quite a bit of support in this zone right here. Now, exactly where you set your stop loss is up to you, because if I tell too many people to set their stop loss in the same spot, it will dump down to that spot, or it can at least. It's happened before, just because when a lot of people set an order in the same spot, crypto is small enough at this point that it can have an effect. All right, so that's a major support zone to be aware of. Now, 12-hour is looking nice. We don't have a lot of resistance here. This is also a bullish pattern, a bullish wedge pattern to have it fall like that. So this is overall a bullish market, and that's why my primary count, or my primary prediction excuse me, is that we see continuation out of this in a bull break. Whether it happens next week, this week, or a month from now, I don't care. I can hold through all of that. But that's my scenario. And then I'm just watching those support levels and being mindful of the potential to see a lower low. I'm not saying to buy in mid-February, by the way, compilation. I'm saying that's when I expect things to be bullish again. I'm actually saying to buy within the next week or maybe a few days. It really just depends. When Bitcoin's down at $8,000, that's when you should be entering the crypto market again, or laddering back in, entering in with little positions over a certain period of time. And the reason for that is because Bitcoin kind of controls the flood of the market. You can compare any chart to the Bitcoin chart, and it will basically look the same. Like if you look at Ethereum versus Bitcoin, and then drop them on top of each other, they look pretty much the same, right? It's basically the same chart. So Bitcoin keeps new money coming into cryptocurrency. Let me make this a line so you can see that more clear. See how that's basically the exact same chart? Yeah, sometimes Ethereum's worth a little bit more than Bitcoin. Sometimes Bitcoin's worth a little more than Ethereum. But overall they follow each other up. And Bitcoin is the leader in this chart. Bitcoin is carrying the rest of the market with it. So when Bitcoin hits 8,000 and hits that buy zone, that's where I'm telling people to get in. And then, yeah, by mid-February, we should be bouncing out of that zone. See, it looks like at the bottom of this C, the bottom of this 5 wave, by mid-February, we'll be bouncing. Now, that's a week or two. That's a week or two away till we get to those levels. So that's kind of the scenario that I'm looking at and the time frames that you can kind of use. Now, obviously, it could take a little bit longer, a little bit shorter than that. It might happen this week. It might just fall this week, but it's more likely that it takes just a little bit longer. So I'm expecting by mid-February things to be bouncing, things to be buying again, buyers to be back in this market, and to be in charge of the market too. Something like that by mid-February. A bull move, which will make a huge inverse head and shoulders pattern, and then everybody will see that Bitcoin is crazy bullish again, so it will probably make like this cup and handle or something like that, and then we'll have a huge bullish continuation out of this trend. Like that. So let's check out the live dashboard and see what people are saying. All right. I mean, yeah, it could just die too. If you're not willing to accept risk in investing, then you should probably not be investing. I personally decided a long time ago that when I decided to trade cryptocurrency, I was willing to lose every single penny that I put into it. And if you're not willing to make that decision too, then I personally recommend sticking to something else or just not investing money at all, because there's always risk. There's risk involved in everything in life. If you get in your car, you have a higher percentage risk of getting in an accident than pretty much most things that people are scared of. So, you know, there's risk involved in everything. I personally like to focus on the positive rather than the risk. The fact that even though it's risky, there's never been a time in history that allowed you to make this much profit off of this much volatility with this much liquidity. So basically, there's never been trading conditions this good ever. I like to focus on that aspect and then make money on that while I can. And then if something happens, so be it. I have been, you know, I like to keep a savings account in my bank account. I like to save real US dollars too. So even if all of my investing failed, I would have made so much off of it by that time, and already have, that, you know, you win some, you lose some. Like, you take it for what it's worth. But the trading conditions right now are so amazing that I choose to focus on the potential for continuation and the probability for continuation, because that's what the probability is in the favor of a bull run. It's very, 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 very unlikely that Bitcoin goes to $0 or Bitcoin goes, it's almost impossible because there's so much liquidity in the market that people would have so many buy orders that low that it would be so oversold that it would have to bounce. Nothing can just free fall 100%. And if you think in terms of free falling or pumping 100% like that, then it's not a good mindset to have. It really isn't. It's better to focus on the fact that there's swings and shifts in momentum. Do you notice how this didn't just go like this? It didn't just go bam, like that. I mean, yes, it's not completely impossible for it to, but every single cryptocurrency exchange would basically have to shut down all at the same time. There would have to be something so catastrophic that the probabilities are not in that favor, right? So as a trader, we think in terms of probabilities. And even if some exchanges are shut down, I think that a lot of exchanges got shut down, and even people, you know, exchanges stopped accepting new users, and like there's reasons that that could cause selling in the market, right? But overall, it's not just going to be a straight pump down or a straight pump up. It's always going to be profit taking. It's always going to be a cycle, and it's always going to have points where it goes up and down like that. Places to get in and out and in and out so that you can continually profit. All right, so let's remove all drawing tools, check out the live dashboard. 1 billion per Bitcoin is a little ridiculous, but it's possible. Oh my God. Lamondo, get a real job. Van XVG. Ardor. Okay, we'll go over one more coin, but honestly, I'm a little over time now. All right, look at that market cycle. Look at that. That's beautiful. Very beautiful. This looks exactly like Komodo. It's basically the same chart. Okay, let's take this. And we go like that. And we go like that. And then we draw a little buy zone here. And then we go like this. And we zoom out and we think big picture. And we go uno, dos, tres, cuatro, and bam, just like that. Elliot wave count, well, this is actually probably making its 3 waves still, to be precise. So, counting subwaves, it would be something more like that. So yeah, continuation for Ardor as well. Very nice looking here. These falling wedge patterns are huge buy signals, so be aiming to pick some up down at 50 cents if you're interested in this coin. All right, OMG. All right, okay, this doesn't have OMG dollar. There we go. All right, so OMG is getting oversold at this point, so we need to expect a lower low. But after that lower low, it'll be very, very oversold and also bouncing right onto the top of previous support right here, or previous resistance, excuse me. So that will become support, and that will be a perfect market cycle. A 1, 2, 3, 4, 5 with a nice corrective wave down. Oops. And that's what will give us that necessary momentum to see continuation on the upside. This actually reminds me kind of the Tesla fractal, but Tesla hasn't, yeah, it's basically exactly the same as a Tesla fractal actually, which is interesting. So yeah, we have this is kind of the way that I'm currently looking at OMG. Personally. So yeah, 1, 2, 3, 4, 5 coming out of that. But yeah, let's actually compare that to Tesla. Oops, Telsa. Okay, yeah, and see if it's a similar fractal, because if I remember right, it's a similar fractal. Oh yeah, this is very similar. Yeah, that's hilarious. OMG looks a lot like Tesla. That's funny. So it is of my opinion right now that we still need to finish this 5-wave for Tesla. So Tesla's a little bit behind on its fractal. It hasn't started its ABC correction yet, back into the top of previous support like that. But it's the same exact fractal as OMG. It's just a bigger time that it takes to play that chart out. And then you can also look right here And it's basically 1, 2, and then you could have like that 3 wave coming, right? So yeah, there's some TA for Tesla for anybody that wants to buy some Tesla. Wait until it falls back onto support at 600 or at $280. That's where I would aim for an entry on this one. But yeah. What do you think about Ethereum Classic? I think that it will go up, but I don't have time to do TA on it. It's in a big double bottom formation right now, increasing in volume. And on the US dollar chart, it's breaking out. So Ethereum Classic has a pretty good risk to reward ratio, but it's also likely to see a lower low with the rest of the market cap before it starts to take off. So just be mindful of that. Verge is going to pump. So if you guys are all... I love how frustrated people get when things start dumping. Just literally just try to think big picture. Walk away from your computer and log out of your account if you need to. Because right now is perfectly fine to buy all of these coins as long as you're laddering in on this panic over the next little while. You know, so give it a week or two, let the bottom get in place and everything to bounce out. If you sell the bottom, you're going to regret it, I guarantee it. Buy silver. I've used AppMex before. Yeah, it's a good spot to get silver. But yeah, so I appreciate everybody tuning in today's stream. I hope that you guys learn stuff when I do this. I'm just trying to help bring awareness and education in the world about cryptocurrency and how to trade it and how to predict these charts, because personally I actually think it's going to be very important over the next few years. I think that we will see an economic boom, basically. We're going to see a lot of overvaluation and things at the top of this boom, but I mean, if you look at the S&P 500, it's very clear, to me at least, that actually this is... There we go. Okay, there we go. Yeah, so for me, looking at the S&P 500, it's very clear that this is the beginning of a new market cycle. This 5 wave could easily come test 1800 again, by the way. Don't be scared if it does test support on the top of this wave at 1800 for the S&P, because if you're looking at the subwaves, the top of this 5 wave could be in at any point right there. And then we'd need to come test the top like this before going higher again in its 3 wave. But we just started a 3 wave, you guys, for the S&P 500, which means basically the entire world will continue to pump. All of the gold, stocks, cryptocurrency, things are going to get crazy over the next little while. So I'm just trying to teach and bring awareness of that so that I can help as many people make money and profit off of this, because I personally think that if you don't, things could get kind of intense, because I think oil will be very, very expensive through this period of time. I personally think it will break all-time highs, oil will. And so gas will start to get expensive, and economic resources will start to get expensive. And the reason for that is because the US dollar is what's losing all this value. And the US dollar is what long-term sucks and is continually dropping. And so if you don't hedge your dollars, and if you don't invest, and you don't make money off of this panic and accumulate more wealth, the pumps and the panics and the market cycles, it really could kind of hurt you, because things are going to start to get expensive. And if you don't have the necessary wealth to have the purchasing power required to live in today's economy, it could be kind of intense. And I'm not trying to scare anybody out of anything. I'm just trying to educate and let you know that that's what's happening in the world, is the US dollar's losing value, And because of that, we're seeing an increase in the stock market, an increase in cryptocurrency, and an increase in all of the things that people hedge their dollars against. So yeah, I just want everybody to be aware of that, the market cycles of the world, and just be learning, investing early on, and being accumulating wealth through all of this. Because if you don't keep up with inflation, if you don't keep up with the dollar losing value because of inflation, aka investing in things, then it will bite you in your back, because everything will start to get too expensive and you didn't keep up with the growth of inflation. So yeah, basically investing is healthy, cryptocurrency is good, save your money, get ready for an amazing year in 2018 across stock markets, cryptocurrency, gold, all of those things. And yeah, I hope that you all continue to stay profitable, and I will catch you guys in the next streams.